Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the financial mumbo jumbo so you don't have to. Today we are diving into an amendment, folks, an amendment to a previous report. This means something was missed or needed clarification in the first go around. This time around, Outdoor Holding Company is giving us the pro forma financial information. What does pro forma mean, you ask? Well, think of it as a hypothetical look at the company's finances as if a big event, the sale of their ammunition manufacturing business, had happened at an earlier recorded time, not just when it actually did. This helps investors see how the company might have looked without that part of the business. So they filed this Form 8KA, which is an amendment to a current report. The original filing was on the 18th of April 2025, and this amendment is dated the 23rd of September 2025. This amendment is all about adding in the pro forma financial statements, which are required when a company sells a significant chunk of its business like this ammunition part. They are emphasizing that this is just for informational purposes and not a projection of future performance. Basically saying, hey, this is what it could have looked like, but it doesn't guarantee future results. Before we get into the numbers, let us quickly look at what kind of securities this company has registered. They have common stock trading under the ticker symbol POWEND, also a preferred stock called 8.75% series, a cumulative redeemable perpetual preferred stock trading, as POWDUP both are listed on the Nasdaq Stock Market LLC. This gives us a little context about their public presence. Now for the juicy part, the pro forma financials, they have filed unaudited pro forma condensed consolidated balance sheet as of the 31st of December 2024, and statements of operations for periods ending in 2024 and prior years. These are filed as Exhibit 99.2. While we do not have the actual tables here to dissect in this specific text, we know what they are showing us. They are showing us a picture of the company after the ammunition business was sold, effectively removing those results from the books and presenting what's left. It's like looking at a restaurant menu after changing their main dishes to see what other options they would have offered. If they had always been that way, think about it this way. If a company sells off a profitable division, they might want to show their investors what the remaining business looks like on its own. Investors can then more clearly see the performance of the core continuing operations without the noise of the divested business. This amended filing is essentially providing that clearer picture. In a real financial table, we would be looking for numbers like total revenue or net income of the remaining business, and comparing it to the combined entity before the sale to see the impact of the divestiture. We would want to see if the remaining part of the company is growing and profitable on its own. This filing also lists the asset purchase agreement from the 20th of January 2025 and a first amendment to that agreement dated the 18th of April 2025. This tells us the actual sale was quite recent and involved multiple parties including Olin Winchester LLC. There is also a mention of a loan and security agreement with Sunflower Banks Incorporated indicating how the company is financed. These are important documents that lay out the legal framework of the sale. Finally, the signature on behalf of Outdoor Holding Company is from Paul J. Kosolski, the Chief Financial Officer, showing he is overseeing this amended filing. It's dated the 23rd of September 2025, aligning with the amendment date. Now, for my take on all of this, Outdoor Holding Company's decision to sell off its ammunition manufacturing business is a significant strategic move. By filing this amended report with pro forma financials, they are trying to give investors transparency about the company's future direction. The core strength here for the remaining business will be its ability to generate profit and grow without the ammunition arm. The risk is whether the remaining business is substantial enough to drive future growth, or if this divestiture was a sign of deeper issues within the company wanting to shed underperforming or non. Core assets, we need to see how the remaining operations perform independently. It's like a hiker deciding to drop a heavy backpack to move faster on the trail, but they need to make sure the rest of the journey is still manageable with what they are carrying. If the remaining business can thrive, they have made a smart pivot. If not, this could signal a challenging road ahead. Alright, that is our breakdown of Outdoor Holding Company's latest filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord link in the description for more community discussions. Thanks for watching, see you next time.